Hey guys, what's going on? Welcome to the video. So we had quite the week in the stock market, and this massive wick on this weekly candle tells the story. So we started out with the falling wedge breakout and rallied near that 380 to 382 key resistance we've been talking about, consolidated for a while for a few days before the dump back down on Friday. So in this video, we're going to be talking about what to expect in the stock market next, including a major market moving catalyst, what to expect from that, along with a few individual trade ideas, setups, and ideas for the week and weeks ahead. Let's get into it. So what caused the market to dump on Friday was another strong jobs report that came out. In this market, good economic news is bad for stocks. What the market wants to see is unemployment rate going higher and the economy start to struggle because that shows the Fed's job is working, which then gets us that much closer to a Fed pivot. The worst thing for the market is continued strong economic reports because that means the Fed has more room to raise rates and tighten on the economy. Along with that jobs report, we had a double inside candle setup on the SPY, which indicates that a large move will come whichever direction it breaks, and that setup just added fuel to the fire once the market broke to the downside. Alright, so now what's next for the stock market? The biggest thing coming this week is the September CPI report on Thursday, October 13th. The current consensus estimates are 8.1% year-over-year inflation and 0.2% month-over-month. These estimates can change slightly in the days leading into the CPI report, so make sure you're as updated as can be on the expected numbers on the day of. It's just as simple as a Google search. This is going to be the event that gives the market the next large move, and there actually is a silver lining to that drop that we had on Friday. As we've talked about on the channel before, if the market rallies into a major event, that increases the odds heavily for a negative reaction and a sell the news event, which is exactly what we saw on the last CPI report and why there was such a massive drop. The market was expecting too much positivity from the CPI report. They got negativity, so we had that huge drop due to that rally ahead of time. A much better setup going into an event like this is the market dropping into the event, as that increases the odds for a post-event rally and a buy the news event. Now obviously what matters most is the data that comes in. If it's 8.3% or above, the market will likely have a negative reaction, and if it's 7.9% or below, the market will likely rally off of the numbers. If it's between 8 and 8.2%, the reaction could go either way, but like I've been saying, if the market does end up dropping more ahead of this event, that'll show that there is pessimism around results, and it'll be much easier to impress to the upside and see a positive reaction for the market. The S&P is also sitting at a pretty major spot currently. It's right on the edge of this large volume gap down to the pre-COVID highs, around 340, and for those who are unfamiliar, it is much easier for price to fall quickly through a volume gap like this, and it shows a lack of support. It is also sitting right at the 200-week moving average, which has been a super important pivot for historical crashes and corrections. This is the spot where corrections in 2011, 2016, and 2018 all bottomed at or near. So this is a major decision level where we're currently sitting at. And finally, 349.12, a little more than 3% below where we're at, is at the 50% retracement level from COVID lows to all-time highs. This is going to be a major level that many investors and traders have their eyes on, so that is another important spot to watch. Alright, so now let's talk about a few individual trade setups and ideas for the week ahead. First up, starting out with the cannabis sector, after we got big news this week from the White House, Biden is pushing to pardon all prior offenses of possession and urging governors to do the same, and the important thing for cannabis stocks is he is asking the Secretary of Health and Human Services and the Attorney General to initiate administrative process to review how it's scheduled under federal law. So a couple opinions that I have on this is that Biden has made promises on cannabis reform before and has not followed through with them. There is no guarantee that this will play out, of course. Some people are also speculating that he's just putting this statement out now to help with the upcoming midterm elections, so these efforts are certainly far from a guarantee. All that being said though, there is massive potential in this sector, as pretty much all these weed stocks have been shorted to the ground. For potential trade on this, we should not be focusing on the Canadian stocks such as Tilray and Canopy Growth, which have gone on those so-called meme runs in the past. The American multi-state operators, aka the MSOs, should be the focus here, as they are the companies that will actually benefit from this as long as these efforts are real. What federal legislation would do for these would take off a massive tax burden. This would help them be uplisted to major exchanges as well, as they currently just trade in the over-the-counter, the OTC market, and the fundamentals of these companies look super cheap, with most trading below 5 times EV to EBITDA. Taking a look at the MSOS ETF, this is at a possible breakout level and a major spot to watch where it's at. Also, volume does not lie, and it just put in the two highest volume days in history on Thursday and Friday by more than double historical levels. The key pivot and breakout level on this ETF is at 13, and then 13.8, which was the previous swing high, is also a big level to watch. I'd keep an eye on the 50-day moving average to hold as new support like it did on Friday, and if it's able to break above that 13 pivot level, this can see the 200-day moving average at 16.2 on the next leg higher as the first target level to watch. So a trade idea for this is to buy on a break and hold above 13 with a tight stop loss directly below and target the 200-day moving average as that initial target above. It could also be an idea to buy where it's currently at with a tight stop loss either below Friday's lows at 11.26 or the 50-day moving average a little bit above that. Momentum plays are still very tough in this market though, which is why we want to keep stop losses as tight as possible, but there is certainly huge potential in this sector and the volume does not lie for these past couple days. A couple trade ideas that we talked about last week was first AMD as a potential dip buy play for a balance at that major $59 level, which was the breakout trigger back in 2020. This level got tested on Friday after AMD lowered their guidance, and there was very little reaction when it was tested. It was just a straight falling knife. So far, this is a pass for me as a trade unless it reclaims with strength back above that level, as we'd want to see an immediate and strong bounce off that spot ideally, but it's still at the top of my watch list either as an opportunity if it breaks back above with strength, or another possible test of that white trendline support for a bounce off of there. Another stock we talked about last week and is still a major watch for me is Google, ticker symbol GOOG, as it gets closer to the 200-week moving average, which is a major bounce spot at about 92.8 currently. This is where it bottomed at during 2020 COVID lows and has acted as major support historically as well. This would be a play where I look to enter calls if it touches that support and has a strong reaction off of it. If it knifes through like we saw AMD do, this should just continue to stay on my watch list until it reclaims that spot with strength, as there's no reason to just buy falling knives on this market unless there is a strong reaction shown. And one more trade idea for the week ahead is with Netflix, ticker symbol NFLX, as a potential play for shorts or put options. This stock has been stuck in a range between 220 and 250 since mid-July, and as we know, big moves come after the major consolidation patterns. It also just broke below this trend line, which has acted as a key spot when tested and can be looked at as a failure to stay within the ascending triangle pattern, aka a breakdown comes next. I'm watching this as a play to short or play puts on a break below 220 with that 200 to 207 support zone as the initial target below and more possible downside on a break below there. This will be a top bearish watch for me for the week ahead if the broad market does see more downside in the coming week. So that is all the stuff that I'm watching for from the broad market and also some individual trade setups that I'm watching in the week ahead. If I did provide some value to you in this video, make sure to hit the like button and subscribe button. It helps me out a ton and I would greatly appreciate that. For anybody interested in joining the private Discord chat, that is the first link down in the description for all my personal trade alerts. And thank you guys for watching. Good luck in the week ahead and I'll catch you all next week. Peace out.